You know, let us do the recording of depreciation. I will start with example one. Here we are told that Barry Mark, trading as Barry Tasty Stores, started his business on the 1st of March 2019. On this day, he bought a vehicle for 300,000 and equipment for 200,000. He paid by EFT for both items at the end of the financial period, that is the 28th of February 2020. Depreciation on both fixed or tangible assets must be brought into account as follows. Vehicles will be 20% according to the fixed installment method, which is the same as the cost price method. And equipment will be depreciated at 25% according to the diminution balance method or the carrying value method or the book value method. Now we bought, let me start by depreciating vehicles, right? We bought them on the 1st of March 2019. And the end of the financial year is the 28th of February 2020. Basically, we've only used it for a year. It doesn't have opening balance of accumulated depreciation, right? Now, when I depreciate it, I will simply multiply it by 20% multiplied by 12, which will give me the depreciation amount of 60,000 rand. And when I depreciate equipment, I'll simply take that 200,000 times it by 25% and times it by 12 over 12, and that will give me 50,000. When I record this in the general journal on the 28th of February, I will debit depreciation. The reason why I'm debiting depreciation, which is a nominal account section, is because depreciation is an expense and increases on the debit side. Then you credit, because depreciation increases accumulated depreciation. I will start with accumulated depreciation on vehicles, which will in this case be 60,000 rand. Accumulated depreciation will be credited whenever we recognize depreciation. It will be credited by 60,000. We will credit accumulated depreciation on vehicles and also credit accumulated depreciation on equipment. Note that accumulated depreciation is a reduction of the cost price of an asset. It therefore increases on the credit side whenever depreciation is recognized. And accumulated depreciation on equipment will be that 50,000 rand. You add the two, that will give you a total depreciation expense for the year, which will be 110,000 rand. That's how we will record this in the general journal. Taking it to our general ledger of Very Tasty Stores, we'll start with vehicles. Vehicles will be plus minus because it's an asset. We bought an asset on the 1st of March 2019. And we paid cash for it. They did specify, which was recorded in the CPJ. And the amount for this was 300,000 rand. And for equipment, we bought equipment for 200,000 rand. Because it's an asset, it will increase on the debit side. And the cost of equipment will be 200,000 because both of them are bought for cash. I think with the depreciation on vehicles, well, actually, this is a minus plus. It increases on the credit side. On vehicles, we are going to credit accumulated depreciation on vehicles because it increases on the credit side. It's a minus plus. And the contra account there will be depreciation, which is your expense. It was recorded in the general journal, and the amount for this will be 60,000. Okay, and accumulated on depreciation on equipment will follow suit as well. It will increase on the credit side, and the amount will be 50,000 rand. That's how we will record them in the general ledger. Okay, obviously these financial position accounts, they will definitely have balance carried down and balance brought up. But for now, because we are right at the beginning, I will just do the basics without calculating balance carried down and balance brought up. Depreciation is a nominal account section, it's an expense. So it will be increased by depreciation from vehicles. So we are going to debit it by accumulated depreciation on vehicles of 60,000. Will also be increased by accumulated depreciation on equipment of 50,000, which will give us a total depreciation expense of 110,000 rand. So depreciation increases on the debit side because it is an expense account. Now, to explain what we have done there, okay, depreciation is an expense and is debited like all other expenses. Depreciation decreases owner's equity on the debit side. Separate accounts show the accumulated depreciation on each asset. The accumulated depreciation account may be regarded as a valuation account that decreases the value of an asset. That's why we increase it on the credit side. Other educators normally call it a negative or negative asset. I say it's simply asset minus, okay, it reduces your asset. It's just a valuation allowance. And your depreciation expense for the year. When we go to the statement of profit or loss, we are going to record it under operating expenses. It must be depreciation of all assets for that specific year, which will be 50,000 plus 60,000, and that will give you 110,000. Okay, let's go to the monster. Okay, this part here. Please note that at the beginning of the year, when we started the 2020 financial year, we did not have any equipment, we did not have any vehicles, okay? Because we bought them during the year, we will put them under additions. So additions at cost for equipment, it will be 200,000, disposals will be 0. Disposals relates to us selling the asset, and we will record it at carrying value. We will do this later on. And we recognize depreciation on equipment. We bought it this year and we depreciated it this year for 50,000, right? Depreciation will reduce the value of your equipment. Your movements will be made up of additions at cost, which is plus, minus disposals at carrying value, which is 0, and then you minus your depreciation, which is 50,000. So basically your net movements for the year for equipment will be 150,000. Now, we didn't have any equipment at the beginning of the year. So the cost of equipment at the end of the year will be the cost of the equipment that we purchased during the year, which was 200,000. Accumulated depreciation, on the other hand, use this formula to calculate it. You take balance at the beginning of the year, you add it with current year depreciation of all equipment, and you minus the accumulated depreciation of equipment sold. So balance at the beginning of the year will be 0. Current year depreciation on equipment will be 50,000, and accumulated depreciation of assets sold. We didn't sell any equipment, will be 0. Therefore, our accumulated depreciation at the end of the year will be 50,000. You will remember from what we just did in the previous 2 videos that accumulated depreciation is only increased by the depreciation for that specific year. Carrying value at the end of the year will be 150,000. Let's go to vehicles. Cost at the beginning of the year will be 0. Accumulated depreciation at the beginning of the year will be 0. Carrying value at the beginning of the year will be 0. We purchased the vehicle worth 300,000, and then we didn't sell any vehicles, but depreciation for the year, which is 60,000 on vehicles, will be in brackets. Movements will be that 300,000 minus 60,000, which will give us 240,000. Cost at the end of the year will be the cost of vehicle purchased this year, which was 300,000. We are going to minus it with accumulated depreciation to get the carrying value at the end of the year, which will be 250,000, right? All right? These are just the basics for grade 10s. And I will recommend that even grade 12s watch this because they tend to struggle with this as well. Okay. Let me ask you to try this one out. Just try this one out. You prepare the general journal. Okay, we'll prepare the general journal. And then we will prepare these ledger accounts. Okay. Prepare the accounting equation, but I'm not too fussy about that. And just prepare this notebook here. All right. See you guys in the next video. Don't forget to like and subscribe, comment if you have any comments, and please share with your friends, all right? That are struggling with tangible assets. Make sure that they start from the beginning, and then because I'll be building up on it as we go. You good? All right. As you continue from the beginning, no cap, guys, you will definitely understand this and you will master this. All right. Thank you for watching. Please hit that notification button. Also,